Hello and welcome to this session in which we will discuss the different types of auditors. In the prior session, we looked at the different types of audits. Just like we have different types of audits like compliance audit, operational audit, and financial audit, we could have different types of auditors. The most common four types of auditors are CPAs, which is Certified Public Accountant, the Government Accountability Office Auditors, or the GAO Auditors, Internal Service Revenue Auditors, and Internal Auditors. Now, as an accounting student, most likely you are an accounting student, we are mostly concerned with CPAs. CPAs are what? CPAs are the group that audit financial statements. So in this session, we'll focus more on CPAs, but we will discuss the role of the other three types of auditors. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, Auditors.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
Let's start to discuss CPAs. Well, CPAs audit financial statements, and they have a monopoly over auditing financial statements for various sized companies. They could be small, large, medium, publicly traded companies, private companies, so on and so forth, as well as non-commercial governmental unit, not-for-profit. CPAs audit all of those. Now, licensed CPAs, which are CPAs, without even the word licensed, if you're a CPA, the implication is you're a licensed CPA, can express an opinion, which is a form of an attestation service on the financial statements. CPAs are also known as external auditors. Sometimes they are referred to as external auditors, and sometimes they are referred to as independent auditors. And that's one of the main features of an external auditor. They are independent of the company that they are auditing, in contrast, we're going to see later, to internal auditors. So we have external auditors who are CPAs, and we have internal auditors, which we would look at the role. CPAs, to be a CPA, the first thing is you have to do is pass. One of the things, not the first thing, one of the things is to have to pass the CPA exam. The CPA exam is governed by state licensing requirement or department. So if you're a CPA, you are a CPA under a particular state. For example, I'm a CPA in the state of Pennsylvania. So the state of Pennsylvania governed my license. They granted the license, they can suspend the license, they can take it away, they can reinstate it, so on and so forth. So the requirement to become a CPA varies by state, whether to obtain it or to keep it. Now, if you're outside the US, the first thing they refer to as CPA is US CPA. And this term, US CPA, gives you the impression that it's an, in quote, American CPA. The CPA is a state CPA. Each state will grant you the license. So keep that in mind. There are three common requirements between all states or all jurisdictions. Now, most jurisdictions are state. That's why we use the word state. But for example, Guam is not a state, but they do grant you a CPA license. It's a territory, but that's beside the point. Three requirements are education. To be a CPA, you have to meet the 150 credit requirement. Basically, all states have to do that now. Experience. You have to have a certain amount of experience in audit, preparing financial statements, various type of experience. Notice it varies by state because each state is different. And you have to complete the CPA exam, this is the CPA exam that you know about. Now, the CPA exam is the only thing that's uniform. It's the only thing that's the same between all states. Well, also the 150 credits. So 1 and 3 are practically all the same between states. Now, some states, so we clarify the 150 credit, they allow you to take the exam if you only have 120 credits, plus a bachelor's degree in accounting. Other state, they want the 150. But to be licensed, all of them, they want the 150. Okay? But the exam is uniform. It's the same across all states. So what should you do if you're looking to study for the CPA exam? You need to go to a website called NASBA, the National Association of State Board of Accountancy. They have a list for all different states, or you can contact your state yourself. Now, also, you can transfer your license between state. Again, this will be something you have to think about down the road once you become a CPA. CPAs. So once you become a CPA, most likely you would start to work at a CPA firm. Who are the CPA firms? CPA firms are firms that audit publicly traded companies, among other things, but mainly they do is audit public companies. That's what they do. They prepare tax return. We'll talk about CPA firms in a separate session. But when you start to be a CPA, usually you work for a CPA firm, and this is where you become a CPA. Now, after you become a CPA, you can transition to the industry, work for a particular company, which is called the private sector. You can work for the government. You can work in an educational role. You can start your own practice if you would like to, whatever you want to do. While you remain a CPA, for example, I'm still a CPA, I'm no longer an independent auditor. I no longer do practice, but I am a CPA. I'm maintaining my license. I have to maintain my CPE credit. You have to meet what we call continuing education, or in the industry we call them CPEs, continuous professional education, to maintain your license, and that varies from state to state. So the details about the CPA exam are in the Uniform CPA Examination Blueprint, something called the Blueprint. It's available on the AICPA website. You can go ahead and download the latest AICPA and see exactly what's covered on the AICPA. Also on the AICPA website, they offer sample exam questions with unofficial answers. Now, those sample questions, they release them every year to test preparers, such as Farhat Lectures, and you can go to Farhat Lectures if you are a subscriber and access those questions. The only difference is I provide detailed solution for every question because I am preparing students to pass the CPA exam. So this is enough about CPAs. Let's talk about Government Accountability Office Auditor, or GAO auditors. GAO auditors work for a U.S. government, for a specific department, for a specific office. It's a nonpartisan legislative agency. They work for the U.S. GAO office. That's who they work for. They're led by the Controller General, and they are accountable only to the U.S. Congress. Think of the GAOs as the CPAs of Congress. So they perform audit for Congress. They review financial data from various federal agencies before it gets submitted to the government, emphasizing compliance to legal mandates on expenditures and receipt. So they're the auditors of the Congress, because the Congress, they allocate money to various agencies. They want to make sure that that money is spent in the proper place, in compliance with certain rules. Well, who makes sure that's the case? The GAO. They increasingly also assess the efficiency of federal government program, and given the size of agencies, the GAO has enhanced auditing method using advanced statistical sampling and computer risk assessment technique. And we'll talk about them in a moment because they have a lot of responsibilities. What happens is in certain state, if you are a GAO auditors, if you have that experience, you meet the CPA qualification criteria. Remember, one of the criteria is experience. Although if you don't work in public accounting in certain state, if you work for the GAO, that is considered acceptable experience in certain state. So after passing the exam, working as an auditor, as a GAO auditor, would allow you to obtain your CPA certificate. Why? Because they audit federal expenditure, they use advanced auditing method, they have a potential CPA status and operational audit opportunities. They are highly regarded in the auditing field. So being an auditor for the Government Accountability Office is by itself a high status. Then we have the IRS agent, or IRS auditors. Well, who wants to be that, right? They are led by the Commissioner of the Internal Revenue. They enforces federal tax laws that are set by Congress and interpreted by courts. Well, you have to keep in mind, their main task is to do what? Audit tax return. For what purpose? For compliance purpose, to make sure you are paying your taxes. Now, auditing tax return, you may think that's simple, but it's not really simple, because oftentimes tax rules are interpreted by court. So simply put, it's not clear cut. So auditing for compliance with federal tax law might seem straightforward, but it's complex because the law is complicated and it's subject to many interpretation. And when everything is subject to interpretation, it means you're going to have some legal fight over some issues. Therefore, you have to know the tax inside out when you are an IRS agent. So tax return ranges from basic individual, like someone with a W-2, to more complex multinational corporation return. So you might work as an auditor only for individual, or you might work to be covering corporation, gift taxes, estate taxes, corporate taxes, so on and so forth. So auditor in these fields, IRS agents, they have to have a deep understanding of tax law as well as auditing experience. Then we have the internal auditors or in-house auditors. Internal auditors, in contrast to external auditors. Internal auditors are auditors that work for the companies. They work for one specific company. Internal auditors work for various organization means, but every auditor works for one company, auditing for management under the board oversight, similar to the government auditing office role for Congress. So what they do is they audit management for the purpose of corporate governance. So internal auditors are part of the corporate governance. You know, what are the corporate governance? Corporate governance are the entities that oversees the organization, making sure the organization is run properly, like the board of directors, making sure management is doing their job. Well, part of the board of directors, they could have also an internal audit committee that oversees the internal auditors. So that's the internal auditors. So the role differ by employer. They could form small teams doing some basic compliance check, making sure you are doing your job, to large teams with very varied tasks, including operational audit and computer system evaluation. So the role depends on how management, how the company, not management, how the company sees the role. In some companies, they may be highly regarded, they might be given large budget, a lot of independence, and other companies not so. Internal auditors usually report, and they should report, to either top executives means people at the top, or better to report to the audit committee, which is part of the board of directors, to maintain their independence. Why? Because internal auditors are auditing the management. You don't want to audit the management and report to management. If I'm auditing you and I'm reporting to you, you have influence over what I say. Well, because of that, what's going to happen is their role should be, so if you have internal auditors, okay, they're auditing management, they should not be reporting to management. They should be accountable to the audit committee. The audit committee is part of the board of directors. So this is how it should be. This way, they are independent from management, and this is how they maintain their independence. Now, regardless, they have limited independence because they work for the company. So external auditors, usually external users might distrust data verified only by internal auditors. Why? Because if you are an external users, remember, the internal auditors work for the company. That's why you might distrust this data, and that's why you want the external users trust more external auditors, because external auditors are supposed to be what? Are supposed to be independent. Independent is important. Internal auditors are not independent, although what they do is they try to make them independent, but that's not always the case. So not all internal auditors are equal. In certain companies, they might give them more authority. The more authority they have, the more independent they have, the more you can trust their judgment. Also, they might be given a larger budget. The larger the budget, the more resources they can utilize. And independence, they might be given independence. How they can be given independence? Well, if you report for the board of directors, now you oversee management. You don't have to worry about what management think about you, because you don't report to management. You audit management and you report to the group above management. In several states, internal audit experience also considered a relevant experience for the CPA certification, certain state. Now, if you're an internal auditor, you'd usually get something called CIA. That's not Central Intelligence Agency. That's a certification called Certified Internal Auditor. I am a certified internal auditor in addition to being a CPA. Let's take a look at the CPA multiple choice questions from Farhat Lectures, where you can find more on farhatlectures.com. The use of the CPA title is governed by which of these organizations? Well, let's look at D. D look very tempting. The American Institute of Certified Public Accountant. The word CPA is mentioned here through the Tax and Auditing Committee licensing department. Is that the case? Is CPAs governed by the AICPA? And the answer is no, they are not. The AICPA writes the CPA exam, but they don't govern the title CPA exam. So the AI CPA, they are part of the exam, not part, they actually write the exam, but they don't govern your title. Well, let's look at A. A looks tempting too. The SEC, the Securities and Exchange Commission. Well, not at all. The Securities and Exchange Commission oversees the capital market, including auditing, reporting, requirement, and disclosure, but they don't govern your certified public accounting. Also, A is out. What we're left with B and C. FASB, Financial Accounting Standard Board. Well, that seems like accounting and CPA, Certified Public Accountant, that should be related. Not at all. FASB, their role is to establish generally accepted accounting principle, GAAP. They have nothing to do with your CPA exam. So by process of elimination, what we're left with is C, and C says state law through each state licensing department, and the answer is correct. Your CPA license is a license, and that license is issued by a particular state. As I mentioned in the lecture, my state that issue my CPA, that issues my CPA, is the state of Pennsylvania. What should you do now? Go to Farhat Lectures, work more MCQs, true, false, look at additional lectures. That's going to help you with your auditing course, with your CPA exam. Invest in yourself, invest in your career. Good luck, study hard, and stay safe.